quickly explain about what we are doing. So a quick disclaimer from our side. Uh, Again, futures and options, not only futures and options, it is for any investment, but especially crypto futures and option trading has large potential rewards, but also large potential risk. You must be aware of the risks and willing to accept them in order to invest in the stocks or options market. Do not trade with money you cannot afford to lose. There is neither a solicitation nor any offer to buy or sell futures or options. No representation is being made that any account will or is likely to achieve the profits or losses similar to those discussed via this presentation and media referenced. The past performance of any trading system or methodology is not necessarily indicative of future results. And also another quick disclaimer from our side. Thank you each and everyone for your interest in understanding about long-term investing in our various services. None in our team are financial advisors or FINRA certified professionals. Investing of any kind involves risk. While it is possible to minimize the risk, your investments are solely your responsibility. It is imperative that you conduct your own research, and past results are not necessarily indicative of future results. The decision to invest or trade is for the attendees alone. Our company's right choice advisors or Pepon Digital and our team expressly disclaim all and any liability to any person with respect of anything and of the consequences of anything done by any such person in reliance upon the whole or any part of this training. So one of the major issues, all right, 95% of us are on this side, right, where we are either employee or we are a self-employee, right, like a doctor or whatever it is, where we have to trade our time for money. 95% of the population, where if we have to go to India for to take care of some emergency, or if we have to go for vacation, then basically our pay will stop. We want to basically share that information or uh, create that awareness of having multiple sources of income, right? Just being an employee or a self-employed, we are taking a huge risk. We all are taking a huge risk. So either becoming an investor where you use money to make more money, or becoming a business owner where you have a system, where you have a team, where you use the team, leverage the team, right, solve the problems, and then you can basically build that additional income, source of income. So 95% of the money is here. Only 5% or 4% of population or of our community are on the investor and business owner side, but 95% of the money is in this side, whereas 95% of the population are on the employee or self-employed side, who are making only 4 to 5% of the overall income, right? That is the risk we are taking because of, right, our educational system or our basically how we were taught, right, to work hard and become an employee, right? That's how we our minds were set like that. That is the risk we are taking. That is the right, that is what we want to educate through our channels, through our systems, where because that we are in the M1 source, we are trading time for money. Either we want to go to M2 or M3, that is our objective, where only 4% are there. 96% we are in the M1 source. Again, the vision of our company is to basically educate, inform, and empower our community around the globe to create a second source of income through various investment vehicles. It can be stocks, it can be ETFs, options, crypto, forex, futures, IPOs, and overall financial planning. Not only, right, to building income, even saving it, right? It can be will, or it can be having some minimum term insurance or whatever it is. Both we want to be like one stop shop for all your financial needs, where, right, our and we are building an entire right, end to end system, right? We're having right, alert mechanism. If you are right, if you miss something on a Telegram channel, you will basically get an email alert. We are building some system where you have a Salesforce reports which shows like how many of the positions which we have taken went up by 10 to 20%, how many went up by 20 to 50%, how many of them went down. So, right, I can show you all those. But we have that entire, we are trying to develop that system. We are trying to develop more and more algos, more and more bots, where things, right, the manual effort should get reduced, and then it should be more automated so that our emotions will not play, and it will be more of right more of operational activities, or so that when emotions are not there, the chances of making money is huge. So that's why you can see that algo trading, or right, including your subscription process, bot process, there are a lot of things which are going on, and which you will see very soon, where we are trying to develop a lot of artificial intelligence solutions, where you can put some of your stocks, and then it will show some of the stocks which you can buy based on your history, right? Based on the stocks which you bought, it will suggest certain things. So there are a lot of different artificial intelligence solutions which are going on, and these are the current services which we are providing. So most of you already know that we are providing these stocks, right, alert service, where we have nearly 10 analysts with different experience. Most of the services outside, they generally provide swing alerts, or some of them also provide swing and long term, and they charge nearly $200 per month for swing, and nearly $500 per annum for right, 500 to $1,000 per annum for long term alerts. Here in our right, in our channels, we are providing, right, scalping, where you can quickly scalp something, or halt notifications whenever there is a huge volatility, right? There will be halts will be applied, you can quickly make some good money within 1 or 2 minutes. The halt note, right, 70% of the time, so you can make good money with the using halt notifications. Right, day trades, we saw in last 3 months more than 100 stocks went more than 100% up on the same day, right? There are more than 100 stocks, right? I'm just giving a rough estimate, where we saw there might be 50 stocks which went 200% up on the same day. So we are providing all such type of day trades, swing alerts, long term alerts, right, email notifications. If somebody, right, we have a bot which will send an alert when something goes up by 20%, bot will send that, okay, I'm booking profit now. So if some of the members might be having small accounts, they may not wait until the target, they can quickly book 20% profit, or it sends a message when it reaches by 50% up from the entry price, and then it sends a message when it reaches to the target. So we are trying to do all such type of things which no other service is providing. You get those automated telegram notifications, automated email notifications, and you have the Salesforce reports for stocks. And for options, right, you don't see the experience, like most of you might have attended Sri's trainings and Uday's trainings, right? And there are like a PB, and there are nearly 7 to 8 analysts providing calls, puts, spreads, butterflies, covered calls, secured puts, iron condors. If somebody don't want to take a lot of risk, maybe just to go with covered calls, secured puts, and spreads, where you can make easily 10%, 20% profit on average per month, right? Or if you want to take risk, nearly we have 65 to 65% of success rate since last 3 months, right? For example, if I invest $1 on every right, for example, if I limit my position size, I put $1 on each and every ticker. So my out of 100 stocks, 65 are making money, 35 are losing. That means still, even if I lose 35, I'll be nearly 30% on a profit basis if we properly maintain the position size. So market standard is generally 60%, but we are trying to beat that by 65 to 70. We are in that range. Again, we are just charging $99 for options. For stocks, we are just charging 99, whereas most of them charge $200 just to provide the swing alerts. Then we have futures, right? Like ES, NQ, gold, silver. Again, we have a team of analysts who are giving all different alerts on futures. Then we have crypto, right? BTC or altcoins, right? We bought Doge again when it went to 16 cents 1 week back. We bought it. Today it is nearly 400% up within one week. And then, right, there are a lot of if some of you are already in the channels, you know how many alerts. Again, it is a team of analysts, right? It is not just the analyst directly giving. Sometimes analysts discuss between themselves, and where they think like, yeah, it is both 2 or 3 analysts agree that is a good one, then we post it. So it is like a team effort. Sometimes that gives more confidence. and then India stocks, right? So again, India market is also doing very good. So we have multiple analysts like Sunny, PB, who are giving day trades, swing alerts, long-term trades. Then we have options in India, which we are starting from this Monday. Again, we'll have all the calls, puts, all different types of options. Then we have trainings, right? Because that is one thing which is a major gap in the entire other services, where there is no end-to-end training. Because just giving some alerts also will not help, right? If alerts, or if we know, right, some institution is buying something, or Kathy Hill is buying something, right, Kathy Woods is buying something, then we can just follow them. Or if we know, right, what Warren Buffett is buying, if we follow, that may not be sufficient. We need to know when to enter, when to exit, right? We also should become independent as part of this process. So we are providing all different types of trainings, like starting from what is stocks, what do you mean by stocks, why companies are issuing the stocks, what are the categories of stocks, how to the right identify the cyclical stocks. We are how to add a stop loss, how to do a trial stop loss, nearly 3 to 4 hours on a fundamentals of trading itself. And then day trading, right, how to do scalping, how to do halts, how to, right, how to use technical charts for day trading. Again, another 4 hours of session technical analysis. Again, Uday and Sri are doing 2 different batches, one on Saturday, one on Sunday, so that it can cater to different type of subscribers based on their availability. We are doing nearly a 20-hour session on technical analysis. Then how to identify market fall, right? Sunny is doing sessions on, right, what are the different ways we can identify that market can fall, right? He identified before market, right, he predicted nearly 3 to 4 times in last 2 to 3 months. And many of the members used those triggers, and they bought a lot of puts and made some good money. So again, lot of organizations charge $500 just to teach basics. Here, within $500, you are learning nearly 50 hours of uh, training, which will help everyone to take more informed decisions, reduce their risk. Then options, right? We are uh, doing end-to-end option, nearly a 20 hours course, starting from basics like what are calls, what are puts, including all the advanced strategies. Then futures trainings, we are doing basics, and we'll be doing more advanced topics on the future side. On crypto, again, you attended basics of crypto, charting techniques, various sessions. So these are the 10 services which are already there. And then we are starting trainings for example, if some of you want to invest in India's stocks, right, you need to identify like which companies are doing good, which tools, how to use Zerodha, how to do buy orders, sell orders using Indian trading systems. Just like here we are training on Thinkorswim, there will be training on Zerodha and other platforms. Same thing with options, and then futures, crypto, and also forex, right? We are very soon starting the forex, right? Because again, forex is a great way to make some quick income, right? Again, forex for US customers, forex for India customers, and also IPOs, right? We saw like how many IPOs gave some good results. So both India and US, we are starting this IPO service. Then you might have attended the Algo Trading service, where, right, if you don't have time to pick up the alerts and do these things, then we have the Algo Trading, where, right, as of now we are working with a partner. Soon our algos or our manual trading, right, one analyst will do the trades, and it will go to all the hundreds of subscriber machines. The same alert will be triggered on all the machines. So we are also working on the Algo Trading services. Then charting services, right? What do you mean by charting services? For example, you might have bought some stocks, right? Maybe 1 year before or 6 months before, which are not part of our alert services. And you don't know whether you have to hold them, whether you have to sell them. Then you can send a request, where we will create a chart for that. We'll put a stop loss, we'll put like what is target one, target two, all those details, and we'll share those charts to you. So that is another service we are starting, where we can provide you those charting charts, with which you can take a decision whether is it better to take a stop loss and use that money for something else, or you can hold on to those stocks. That is one more thing. So like that, we want to, right, have we want to make this as one stop shop where you can use your knowledge, where you can get educated, understand what you are doing, and then whichever you like. Some of you may like stocks, some of you may like options, some of you may like right crypto, some of you may like futures or forex or IPOs, algo trading, whatever you, it is up to you. But instead of keeping the money in a bank and getting 0.25%, we are seeing like Ethereum within 2 weeks, it went nearly from $1,400 to nearly $4,000. Right? We saw how Dogecoin went from 16 cents to nearly 75 cents within. So we are not in that old generation where you wait for 1 year to make a 1% rate of interest. We have to use the opportunities, but we should not be taking risk also, right? We should not get into that fear of missing out. Or so with proper education, with proper knowledge, with the proper support of a team of analysts, we should be able to get those things. Again, I'm not saying that we'll be making, right, we'll be doing 100% correct decisions. There might be always, there is a risk in any because there are factors outside our control, right? Whatever technical analysis someone does, suddenly Biden announces something, then immediately everything may go down. So we always have risk in any type of investment. We need to understand that, but with the help of all this education and with the help of support of mentors, the risk will definitely get reduced than what we just do individually, right? Again, we have all this panel of analysts, right? If there's just a small list here, again, there's only for stocks and options. For crypto, we have again another 7 or 8 analysts. We have Prasad, Sunny, Sudaji, Uday, Varma, Nagesh, Sri, Praveen, JP, Manoj. Again, on average, experience is nearly 10 years for each analyst. And that's what we are trying to, right, bring that second source of income to our community. And right before we go to the long term investing, again, there's a quick, if somebody is new to trading, right, these are the different ways we can do trading, right? One is you can do scalping, we can do day trading, swing trading, position trading. So again, each strategy has its own advantages, disadvantages. We have seen more than 100 stocks which went up 100% on the same day, right? By using scalping and day trading strategies. Just last week, we saw BTX went from $10 to $79 within the same week, right? We saw that the PRPO, right? They started developing some kits for, right? They started placing their products on Amazon. It went from $2 to $8 on the same day, just last week. And every day we are seeing 1 or 2 products which are going 100% up. But do we have that time to do day trading? Do we have time to do scalping? Do we know when to enter, when to exit, or do our emotions play? So for each type of risk appetite, for each type of income levels, our trading strategy might be different, right? Somebody in their 30s to 40s, or right, they may have a bigger risk appetite. They are okay to take the risk. They may have additional cash. For them, scalping, day trading might be good. For someone, they just want to go with swing trading, where they want to put a buy order, sell order. They want to just do the system, do everything. They don't need to sit before the system. Or some people want to save taxes. They don't want to every day or every week monitor how the taxes, stocks are going up, going down. They don't want to take that stress, or they cannot take that tension of this volatility in the market. Right? Last year it was like a full bull market. This, like last 2 months, especially Feb to April, right? It is like morning it will be one way, afternoon it will be one way, at the end of the day it will be one way. So it is very difficult for the analysts also. If if we had 2020, our success rate would have been 90-95%, right? It is like, right, Sachin or Virat Kohli also facing difficulties, right? Even though they are 20 plus years experience, because of the sudden changes within the same day, right? SPY will go up to 422, again it suddenly goes to 417 within next 5 minutes. That is the volatile situation. So based on that, based on our risk appetite, we can choose whichever strategy we want based on our portfolio size. So that's what we are trying to introduce you, all these different methodologies, techniques, So you can decide, right? It is up to you, right? I cannot judge that scalping is bad, day trading is bad, or long term investing is bad. It is up to you to decide, because you know better about your positions, you know better about your portfolio, you know better about your risk appetite. We want to educate you on all the strategies, so that's why we are teaching about day trading, we are sharing about scalping. Every day you see nearly 5 to 6 tickers, where nearly 3 to 4 of them will go 30-40% up, right? Well, for scalping and day trading. So in the same way, today we want to, right, one of our analysts, Nagesh, developed some strategies. He's already helping some of his clients with his long-term strategies. Today he will share about that positional trading, or why long-term investments, what are the benefits, what are the advantages, what are the factors involved in deciding the long-term investments. We'll be sharing all that info. So again, it right, you think about it. You, if you feel it is good, then we'll be providing more details. But yeah, with that, it's all yours, Nagesh.
Right. Thanks, Kishore. I'll start sharing my screen here. Okay. Are you guys able to see my screen?
Yeah, we can.
Okay. I'll do the presentation. All right. So my name is Nagesh. I'll be just going through these topics today. So basically, I'm covering about a long-term investment. This presentation is very high level, just to get an introduction to long-term, what to look for at a high level, and how the mindset should be when you're actually doing in long-term investments. Okay. So with that, it's a brief description. So basically, your long-term investments, right? I mean, when you think of long-term investments, basically thinking about the future, like what it will be from 5 to 10 years from now, right? Long-term is not about 1 year or 6 months or 3 months. So that's a mindset you have to completely uh, start thinking about in terms of holding your assets for long term. So one of the things we do is basically do the research of the macro trends, right? As you can see in the last few years, what are the trends? I mean, if you look at the past in 2010 to 2020, what were the trends that were existing, or that actually proven out that they can return your triple, or more than triple of your investments, right? One thing clearly stands out as a FANG: the Facebook, Amazon's, Netflix, Google. What were the common things in them, right? What kind of companies were these? Before 2010, they were like very small companies. They grew, right? Those are the macro trends. Those are the social platforms exploded. E-commerce exploded, right? So people who has actually identified those trends before they actually exploded made a lot of money. And if you see at Facebook, you know how the stock went up. If you look Amazon, we all know how it performed, right? So basically identifying those trends is a key for long-term investments and your belief in those trends. And if you, I'll go through the current trends that are trending today, but just want to give you a perspective what it is, right? And buying then holding for multiple years, and this should align with your goals. So when you're putting a few $1,000s in certain asset, you should align with your goal. What is your goal out of this stock? Why I'm investing in this, right? And then once you invest, you have to verify and manage the assets. It's not just putting some money in there and just forgetting about it. It's about, again, managing the sense. You have to follow the company. You have to make sure what they're doing. Just follow the company on the Twitter or on the Facebook. Doesn't matter, but you have to keep checking what they're doing, right? And the last but not the least is reading books about investing. There's so many smart people written so many good books that you'll be amazed once you start reading how they think and how they made the wealth they made all these years. Okay, always follow people who are smarter than you. That way you will be more than average of your five friends. Okay, and long-term investing is not about that your friend or neighbor told you about. It's not about something that's been talked about CNBC, and not about some analyst is calling a bullish or a bearish call on certain stocks. Ignore the noise. This part is all noise. Okay, as long as you can be away from this, you will become a better investor, right? Uh, and before we go into investing, I just want to make it clear. I think Kishore touched upon this. Trading and investing are two completely different things. You should able to decide for yourself what is your goal and what type of uh, stock trader or investor you want to be. Again, there are again pros and cons to each of them, right? Trading focuses on short-term returns, like you can make like 100% in a stock in a single day during day trading, or you can have a long-term goal, like I want to tenfold my investment. I want to invest 100K today. In 10 years, I want to see like $1 million. Like, what is my strategy on that, right? Again, your trading comes with a lot of high risk, high rewards, and there are multiple types of trade types and day, scalp, swing, and you can go multiple micro swing as well. But again, this all requires time and your ability to actually do those things based on your situation, your personal situation. Or you're a full-time employee, or you're a part-time employee, or just want to take up trading as a full-time. Then the left side will be more appropriate than the right side, right? Um, Again, buy and sell is what trading does. Investing is more of buying and holding or managing the assets. Um, Decisions are made in technical analysis on trading side, and decisions are made on fundamental analysis. So these are some of the things that most of us already know about, right? Trading is about quick returns, and investing is about consistent growth. That is a key word. It's the growth. And you might have heard people talk this growth term all over. I mean, if you watch CNBC or any other investing channels, the growth is what they repeat and repeat and repeat all day, right? And I'll talk about that in the later slides here, why it is important. Again, once you nail this down, again, it's not an hard and fast rule that you have to be a trader and or you have to be investor. You can be both. Like me, I'm both. I actually trade. I also invest, but I have two separate accounts because I don't want to gamble my P&L on these things. So I maintain separate set of accounts, separate cash for both of them, and then decide how to trade that. But you can do both, but have separate accounts. Okay. So the different long-term investing vehicles. You can invest in bonds. You can invest in mutual funds. You can invest your 401k or double your 401k to an extent where your employer can allow. You can do equities, tangible assets like real estates or cash savings. Savings is also investment, right? So again, think about it. Where you want to do that. Your investment should reflect your personality. What kind of person you are, right? Can you stomach the volatility, or you don't want volatility? You just want to invest and be a little more safer and then go for bonds, or maybe go for mutual funds, or maybe put in your 401k, right? Or if you're a little bit risk taker, yes, I want to take some risk. I know this game, I have studied enough to get into this. Then go to equities. you know as you take on more volatile assets, your risk will considerably increase, and you have to be aware of that. Okay. Again, your investment should reflect who you are as a person. Okay. There's something not anybody can help you on that, because somebody says, hey, get into this stock, and we cannot tell you where to buy, or we cannot tell you like where to take profits. I mean, it's all emotional game, right? You might think the stock might go up, and or somebody else will think stock might go down. So those are the emotional factors, so that should be reflecting upon your personality, on what kind of investment vehicle you want to choose. Okay. Here at Research, we prefer equities as one of our services, so that's where we choose to invest in equities. All right, so the landscape of US market. So whenever somebody I get this question a lot of times, people come and ask me like, hey, what do you think about this stock? I mean, I just give a blank face at them, like, what do you mean by what do you think of the stock? I mean, what did you do to learn about the stock, right? And what sector, what industries in it's been traded, or what were you thinking about it? Because just because your friend bought the stock and it went up 100% doesn't mean you have to get it. Okay. So there are about like 400, 4,000 plus. I think maybe the round number is not perfectly right, but there are thousands of stocks in US market today, right? And these all trade in different sectors. As a long-term investor, it is key for you to understand these sectors. You should know this is a top-down approach, not a bottoms-up approach. Many people do bottoms up. They take the stock and try to get traded without knowing what industry it is, what they're doing, and what the future of that industry or the sector. So, if to me, I mean, personally, I only have certain industries or sectors I look at. I ignore rest of them. The reason is it is impossible to chase all these stocks. Nobody in the world can do that. Okay, and you have to pick and choose your landscape, which one you are comfortable with. I mean, I work in the IT, so information technology is a second nature to me. I mean, like, I will understand everything about technology. I understand the companies in the technology industry. I also understand communication service. I understand healthcare. I understand finance. So these might be my sectors that I choose, and each sector will have an industry. So if you look at that, this is how the top down will be. You have a sector, you have industries, and industry has stocks. So don't go bottoms up. Come from the top down to identify where your strengths are and what sectors you are familiar with. I mean, if you're working in finance, that's what your sector. You'll be easily understanding what's going on with that. You can easily identify the trends in that industry, right? So instead of chasing all these other industries, there are so many stocks in each sector in each industry, and you can easily pick up these long-term stocks from those sectors. Okay, the first thing, choose your sector, choose your industry, then come to the stock. Okay, so sectors can be further classified as growth sector, cyclical, and defensive. So growth is something that is being chased, one of the hottest category, where many of the investors put their money in. Why? Why? Because the growth is growth. I mean, you have seen stock grow from a few dollars to $1,000, like Amazon or the Facebook. Facebook was trading at $19 at one point, but it's a growth stock. It grew. The company grew, right? So that's my personal favorite, the growth stocks. I kind of ignore cyclical and defensive. Defensive is more like, I put those numbers there, what the sectors mean. They're all good. I mean, again, they're less volatile. If you're a person who likes less volatility in your portfolio, that's where your sectors would be. You should not be investing in information technology or any other volatile sectors. Okay, very important to understand what is this and what kind of how do you reflect on yourself based on the information. Okay, all right. Next one. All right, why do you choose to invest in stocks or equities? This is why. This is a graph from SPY graph from 1994 to 2021. This is the current one. Why do you invest in this? If somebody is looking at this chart and say, oh, okay, why should I invest in this? Yes, stocks always go up. Long term, short term doesn't matter. What the stock does tomorrow or day after or weeks or couple of years from now doesn't matter. Stocks always goes up. And people, I mean, when you're investing in stocks, think like a professional trader, not like a retail investor. Professional traders, those are the guys who work in the hedge funds. Those are the guys who work on the trading floors. Those are the guys who make these big moves, right? So you can see these drops. Say you can say, hey, this stock market dropped. It did not go straight up. Yes, stock doesn't go straight up. This is how it goes up. But as an investor, as your personality reflects, this is the volatility you are ready to take on. This is the risk. Okay, this downtrend is your risk. Are you able to sustain this volatility, right? Is what you have to answer yourself. So normally, most of the people will start buying somewhere in this range and start selling here because they panic. Whereas the professional traders buy here, they buy here, they buy the dips because this always goes up. And it has been going up since 1940. This is only 1994 chart. Okay, very important. So when you're in trouble or when you are confused why the stock market drops, zoom out, zoom out on the chart. Start learning to do basic charting. Right. My favorite platform is TradingView. I use that. There's a free version of that. Look at the chart. What the chart tells you. There's a story to be told here. Okay, and this is what from here to here. This is the trajectory. How it goes up. Okay. All right. One second. Kisha, do you want to take the questions at the end of the session, or you want?
Yeah, we'll take it then. Again.
Okay. All right. Market cap, another key concept of investing. Uh, so we have different market caps. We have mega cap, which is not, which is any company 200 plus billion dollars. We have a large cap, which is around 100 to 200 billion. You have mid cap, which is 2 to 10, and smaller micro caps. So when you're entering a stock or buying or thinking to buy a stock for long term, this is one of the aspects you have to see. How big is this company, right? What are the growth potentials of this company? What industry it is being related to, right? What is the prospect of that industry? What are the trends of that industry? So you got to do all this analysis before even investing a single dollar in any stock. If you're not done your analysis or homework, you're just gambling, or you're just trading on hope as a strategy for the short term. Okay, very important to have that. I'll be talking a little bit more like market cap, why it's important in the strategy that I use or will be using in this program. Okay. All right. So yes, so those are all good, but how do we identify an asset? How do you zero down to certain stocks I want to invest, right? So identify the trends. If you take the current environment, what are you seeing, right? Due to COVID, most of them has been digitized. Digital is a big thing that is going on right now. Artificial intelligence is going on. EV trend is going on. Telehealth, genomics, aerospace. So these are the trends. I mean, whatever you're talking outside with your friends and everything, that those are the trends that are going on. Your job as a long-term investor to identify, hey, what are the sectors and the industries these particular trends are trending in, right? Then search, just keep searching on the stocks. There's a lot of information out there. There are a lot of websites that give you information about sectors and industries and the stocks related to that. Make a watch list. Okay, if you're interested in AI, that's where you have to focus here. Or you are interested in electronic vehicles, right? EVs, Tesla and the other cars. May make this watch list. Understand their business model, very key. Hey, what kind of problem they are solving, and how big is that market? It's also called as total addressable market. So if you're taking digitalizer or streaming services like Roku or Netflix, how big is the market? It's a pretty huge market. I mean, there are a lot of competitors, but there's a lot of opportunity to grow in that sector. Okay, and finally you have to understand what is the competitor's advantage, or what specifically this particular stock is being getting to the industry. What kind of problem, unique problem they are solving. Okay, so this all takes time. I mean, it is not an easy thing. Nobody, there is no software or tool that will tell you all this. Okay, you have to do a lot of research, because I spend a lot of time researching, attending their earnings calls, what the CEO has to say about a certain company, which are stocks I'm following. As I said, I'll be using information technology as my key sector, and I will follow everything in that. And there are certain industries I weightage more on that. I shortlist my stocks, and I basically follow the CEO talks, the earnings calls, read reports, read any CNBC articles on those things, because I want to get multiple perspectives. And the other key things, I follow the financials to the core. So that's where you build your strong foundation. Basically, is doing that research, and you have to know your company, because you're putting your hard-earned money on a company that you want to hold for a long time. So it is very critical to do that research. Okay, and yes, there are multiple research services available that can provide a lot of information, but their conviction is not your conviction. If somebody says, hey, I did my research, this is great, this is why I think the stocks will go up. But again, you had to read the report and make sure the information makes sense, right? And you do your own due diligence on top of that to build your conviction, your confidence on that particular company. Okay, So that is very key in long-term investing. So if you don't have conviction when the stock drops, guess what? You will sell that stock only to know the stock went back up after a few weeks. Okay, I know many people were in this situation. I was in this situation as well. So, but yeah, that's where your conviction or confidence in that particular company should come from your research, believing in what they believe. Okay, very important. So once you identify that, let's say you identified a stock and you said, okay, how much I have to buy, right? So uh, there are multiple ways to do that. Uh, some people do position sizing with a stop loss. Let's say you identify XYZ and said, now I have $10,000 to invest in this, but 10,000 can be your long-term portfolio amount. So how much you have to invest in this particular XYZ stock? So I normally, when I do my allocations or start buying, I buy it over months. I don't buy it at once. So yes, this stock is good. It has went up maybe 30% when I actually identified, found out about this stock that can grow in the future. So I normally start with maybe 0.5% of 10,000 or 1% of 10,000. You know, depending on where the stock price is, I do some basic technical analysis. Find out the moving averages and stuff like that. Uh, Keep following that. Okay. Some people go position sizing. I think we shared a position sizing calculator how we do that. So you can use that formula and use that as a guide. But normally I start with 1% and I go all the way to 5% and 75% of my stocks. So in my portfolio, if you have 100K, most of my stocks will not be more than 5%. If I have very high conviction, I do 8%. I think I don't have anything 10% yet, but yeah, I do have 8.5 some stocks. But that's what it is. That is very key. The idea here is you don't have to put everything in one basket. Diversify within that portfolio. Because if something goes down, we don't have the company. We are just believing the company based on the information, public information that is available on the internet or on their company website. We don't know any company can go bankrupt. When something that happens, your portfolio should not suffer. That means you should be able to sleep well overnight. So that's the reason it is very important to have this position sizing, portfolio sizing in your portfolio and have multiple stocks. I mean, you can have as much as 25 to 30 stocks in a portfolio for long term. The idea there is like even if 70% of those stocks makes profits, it'll cover up for all your losses for 30%. So you're looking mainly for growth stock that can grow in 1 times, 5 times, 10 times over the or long period. So imagine if 5 stocks goes 10 times of your base investment price level and 3 stocks are lost, it doesn't matter. Your portfolio is still in green. Okay, that's the idea. So when you're building your position over time, you basically start with starter position. That's what I say, 0.5, 1%. I mean, it really depends again who you are, right? What's your personality? How much can you take? How much volatility? How much stomach do you have? Averaging down is a great way to add. So, you know, people wait for months and years. Charlie Munger, I think, is one of the Buffett's business partner. He says the money is made in not buying the stocks. Money is made in waiting. You have to wait for the opportunity. Every stock goes up, comes down. Okay, it's a patience game. So, like last 3 months, the market is very volatile. It came down, but the last year, it was all up, 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 right? So I know many people who have bought in this high levels. Now they are like suffering because they did position sizing greater. I mean, they cannot handle that. They are in confused state what to do, whether keep it or sell it. So that's what happens. So now is opportunity. Like I see, I added a bunch of stocks in February or in the month of March. I always take this opportunity when everybody's selling, I buy. Averaging up is also a strategy because if a stock is going up because they're performing good, their earnings are good, it'll keep going up. So you have to keep buying. There's no other option. The other option I use is selling puts. Sometimes stocks are oversold. I just sell puts on. I don't know, but I think most of our option members are familiar with selling puts. That's one of the strategy we use. I used to buy stocks as well. Okay, so there are various ways. I mean, you just need to identify what works for you and keep following that strategy. All right, what do you do with the market crash? I think again, you know, crashes always happen. S&P mostly corrects 5 to 10% every year. If you look at the history of S&P, there is always a correction. And what you do in correction, just keep buying your highly conviction stocks. Uh, S&P normally corrects 20% every 5 years and more than that every 10 years. That's what you have seen in the pandemic. The last time it corrected was 2008, 2009, and now it's 2020. So give or take, that's the statistics. Okay. So what the long-term investors should do, the investors should take this opportunity to buy the good quality stocks. Okay. So basically, I normally don't sell stocks a lot when I buy something. So when you say, okay, market is keep dipping, why you want to hold on to stocks? My only question is, okay, market dipped, did the fundamental story changed? So let's say if I'm holding Apple, okay, market dipped in pandemic, but did the fundamental story of Apple changed? The answer is no. It was just a market reaction due to the virus, right? So what the smart people do, they buy more, take that opportunity, and just keep adding to their existing positions. Even you keep adding to existing positions and keep the stock keep going up, it compounds. Compounding is a very a great strategy of increasing your wealth. Okay, so that's the key. Buffet has sold all the airlines in pandemic. Why? The fundamental has changed, right? People will not travel as much as they're traveling before. He has realized that and he sold them. That's the right move. Okay, so it's a key to remember. Fundamentals are important. Market reactions, it happens every day. Don't care. Long-term investors don't care about the market reactions. What happens next week doesn't matter. What happens in 1 year doesn't matter. Okay, as long as the fundamental story doesn't change. Very important to understand. You can also use stop losses, but again, in a crash like pandemic, you'll be taken out. And again, you'll be trying to time the market, when to get in, when to get out. So that's one of the reason I don't use stop losses in my long terms. You can also do hedge. Some people do that. I don't normally, but hedging is again going to cost you. They'll say, okay, hey, you are long on this stock. Again, it depends on position sizing. If your position sizing, you're just only 2% of your portfolio, why you want to hedge? Position, it all comes down to position sizing. If you put like $100,000 in one stock, yes, you have to hedge it because it is not going to go up all the time, right? So one way you can do is you can buy the puts on those stocks, but again, hedging itself is a different strategy. I mean, hedging is something that has been used by big players because they have a lot of money at stake. And these are all short-term investors like the hedge fund companies. They do a lot of hedging. They do buy puts or buy calls against their shorts or whatever they're doing. And we as retail investors don't have to worry about that. As long as you're maintaining your position size, your convictions and everything, we don't really have to have a hedge. Again, lastly, always look for the market crash or sell-off as opportunities to buy good quality stocks. Whenever somebody says crash, you go and hunt for the stocks. You just keep buying. Okay. Why? Market always goes up. Okay. Eventually. So risk management. So again, all investments carry risk unless you're putting your all money in savings accounts. Okay. That's the only safe way to have your money in the safe place. Uh, Again, you can manage risk in multiple ways, as I explained you, hedging, buying puts and all that stuff. But again, position sizing is one of the best ways. I always use that. um, as my weapon. So if the market goes down, if you lose your sleep at night, then your position size is wrong, or you invested too much in something that your conviction was very low. Okay. Uh, so basically, one of the other ways you're taking the risk when you're invested in 10 different stocks or you invested in a few stocks, you always have to follow the company, always follow them on Twitter. You have to make sure what they're doing. You should always follow their earnings. Whenever the earnings reports are there, be on the be on that call. Listen to what the CEO is saying, how confident they are, what are they doing. It's very key. How are they growing? Right? It's always about growth. I mean, even if you're working, I believe most of them are full-time employees. Everybody in the company, the CEO always talks about growth, growth, growth. The only word that comes around most of these C-level employees is growth, because that's what the market cares and nothing else. Okay, and it can be challenging to many companies, but that's how the innovation comes into picture. That's how they create the competitively differentiation companies or products. Okay, disruptive products that can change the entire landscape, the dynamic landscape, right? So that's what matters. Okay. Again, if the fundamentals to the company doesn't change, that is not performant for a couple of quarters, since trouble with the management, not been transparent. These are some of the reasons to exit out of the position. Okay. That is what I mean by fundamental story, not market crashing. Okay. Not something, somebody said something and the market crash, that doesn't change that story. What changes? Their growth story. Are they growing? Or the management is not been transparent, or they have been changing some of this management to C-level positions very often, or stopped innovating, right? That's when you have to make. That's the reason I said in long-term investment is not buying and holding. Long-term investment is buying and verifying. You have to verify, keep verifying. Okay. And again, never get married to your stocks. No emotional connections to stocks. If they are growing, keep them. If they're not growing, take it out. All right. So our investment strategy. So what we do, we look at when we try to buy anything, right? So my personal investment is basically I look for stocks that can grow into multiples, what you call as multi-baggers. So these are the companies that I look, which are at a very you know low end of the cycle and has potential to grow much bigger over the long term. We look up companies which can be next Amazon, next Netflix, Apple in terms of returns. So I know many people are buying Amazon, many people are buying Netflix. I don't have any positions in them, none. I don't buy this because they're already big. Okay. So one of our ideas of stock generation, sorry, we look companies at 1 to 10 billion with a consistent revenue growth. That is the key. I mean, I should have bolded that sentence right there, but any company which is making 40% a year growth is a keeper. And again, it depends on the industry and all the stuff, but there can be limitations between which sector you're following. Tech is one of the hottest sector, uh, has always been. Low PS ratio. PS is the price to sales ratio. I like companies which are founder led because they have proven over time that those are the companies are very successful. Take Amazon, take Netflix, take Facebook, Google. They're all founder led. Good management team, and they should have innovative products, disruptive, which can disrupt certain industries, certain old timers. That's what that those are the companies that will grow like in multifold. And the culture, you can go on to glassdoor.com and study their culture. That's what I do when I look for companies. We focus mainly on Nasdaq and tech stocks. I mean, that's our motto. That is where you'll find these kind of companies. Okay. And I keep adding those over months and years. And our goal is to turn 100K into 1 million in 10 years. Yes, it is possible. I'll show you in the next slides. So this is the goal. So this is the whole idea generation that we focus on, and we find stocks in these sectors, do the research on them, and make sure this has potentials, and we can pick a bunch of stocks in this industries sectors, and and then compare them against our criteria. Okay. So this slide is very important. Uh, why revenue growth matters? Why this line matters? As you can see, any company, this is the S&P. This is real data done by somebody. As you can see, when you're a long-term investor, you're mostly talking about cash flows, multiples, margins, and revenue growth. And why my focus is only on revenue growth? I kind of look at all the other parameters, but I kind of ignore them for most of the time, except for the revenue growth in the PS ratio. Why? As you can see here, in the first year when a company starts, these are the ratio, these are the levels where these matter. But over time, how the revenue grows increases. This is the only thing that matters in the company, nothing else. As long as this number keeps growing, your stock price will keep going up, up, and up. Okay, this is the key thing. If you don't have to know every fundamental, every financial element of the financial report, just focus on the revenue growth. Just focus on the PS. PS is the how much you are paying for the price to sales ratio. That means if they're done, how much you are paying for every dollar of sales they are making. You might have heard in the CNBC analysts speak about, hey, this is trading like 70 times their sales, so this is very costly or undervalued or overvalued, right? Yes, there is some merit to that, but again, that is something that gives you, okay, they're trading at a certain multiples. Yeah, it is very costly now. Maybe you have to wait a little bit, come down and see how the revenues perform. But again, there is no entry, there is no right time or wrong time to buy high investment, high conviction stocks. Okay, so this chart is very important. This proved time and over that revenue growth is the only key thing that matters in a company. Okay, let me show you some slides here. Other thing, I'll show you why revenue growth matters, right? How you ought to use that. So this is one of the site I use. Let's see Roku. All right, as you can see, this is the revenue growth chart. This is how it should look like. Okay, see how Roku has grown consistently. It just keeps going up and up. There is no doubt why Roku is now trading at where it is trading at $300 per buck. And I got in at Roku at $90 when I did my initial investment. I kept adding until $140. Now it is a two times for me, two bagger for me. I actually started a new profile in 2021. I added Roku at $320 again. Why? That company just keeps going up. It will perform. Why it will perform? I'll show you what my rationale is on this stock. So if I search Roku here, remember I told you about market cap. What is the market cap of Roku? 37 billion. Are you kidding me? Just $37 billion company. Compare that. I'll compare this number to Netflix, which is a similar services, right? Okay. Netflix is a $221 billion company. That is why market cap is key. So now tell you guys can you know tell me, like, which is cheaper? Is Roku a $37 billion company cheaper, or is Netflix a $221 billion company cheaper? Roku is trading at $300 plus, and Netflix is trading at 400 or 500. I think so. Yeah. So the stock price doesn't matter. Market cap does. Can Netflix be 10 times from here? I highly doubt. Can Roku be grow 10 times from 37 to 370? Highly likely. Okay. So that's the key difference between this one and your other stocks, Amazon or Facebook. Okay. So be mindful. That is the key difference why this company can keep growing. It's only $37 billion company. That's the reason stock price doesn't matter. Market cap does. Yes, Facebook is $300, but its Facebook is already 200 plus billion or 300 billion. I don't know. Or Amazon is $3,000 company. It's a $1 trillion company. Can it go 10 times? I don't know. It's highly unlikely. Okay. Once they're big, it is very high for very tough for them to go because they have to get new businesses, new products. I mean, innovation. It just stops. I mean, economies of growth or economies of skills. There's only a limit for that. But companies like Roku and the starter companies, they just kept growing. And the last earnings of Roku was mind blowing. Okay, that is why you have to focus on that. The revenue growth, the market cap, PS ratios. Those are the only things, three things you have to look at in your investment decisions to start with. Again, you can go deeper as you learn more about that, but that's how it is. Okay, there's so many examples within my portfolio. Does this. Think one thing. Okay, something is not working. Okay, go back to my presentation. That all right. So I hope you got the idea why revenue growth is matters. Okay, on the market cap. So compare that to your Amazon, Netflix, and everything, and just simple math, man. It's like what is the possibility of them growing so much? So versus compared to all these competitors, like coming everywhere. Because right now, anybody can start a company just on the internet. People are democratizing all these products, and these big companies, cannot compete with them with these small products, but they will have the niche. They will grow like crazy. Okay, remember the $1 trillion is a new $1 billion. Okay, $1 trillion are becoming very common these days. Okay, all right. So why Nasdaq? This is why Nasdaq. This is from 2000. Would you rather invest in S&P on the orange line, or you want to invest in Nasdaq? I think that's an obvious answer, right? So Nasdaq always outperforms S&P, and that's the reason why I focus on Nasdaq. These are the high returns, and they always perform. Tech, everybody needs tech. Imagine you are living. If there was no tech, the way it has evolutionized all these years, in the pandemic, you would have suffered like anything. Okay, online shopping, online grocery, online food deliveries. There's so much stuff going on, so much innovation. So those are the five key trends I just showed you previous slides. Those are where you need to focus. You read on them, get knowledgeable, identify the stocks, start investing. Okay. So this is an example of a growth stock. This is an example how we demonstrated of a shop. Shopify is an e-commerce merchant website. If you don't know that. So December 2020, their earnings are 2.9 with the price. Their current price is 1,100, PS ratio 48, and the implied market cap of one. It's only $140 billion company. It competes with Amazon on the merchant side. Amazon is $1 trillion. This is only $140 billion company, and their stock price is 1,100. That's the reason stock price doesn't matter. Market cap does. So this is an illustration somebody posted on Seeking.alpha. Basically, they said if Shopify grows 40% every year from 2020 to 2030, these are numbers looks like. Okay, yeah, the stock price will be 6,750 pre-split, and your market cap 800 billion. It is still less than Amazon's $1 trillion. Okay, with a PS ratio of 16 times. PS ratio right now is 48. As you grow, keep growing, you get 16. At that time, that doesn't matter. Look at the percentage of growth. So these are the stocks you should look for. These are the innovative stocks. This is an example you can do for every stock that you own. How much they can grow? Can industry and oil stocks in the oil industry go like that? Can your healthcare do that? Can your energy do that? I want. It's your call how you want to decide. So, but this is how you calculate it. It's easy to estimate all this. 40% is a normal growth, and we are taking into consideration. Shopify beats hands down on the 40%. They grew like 60, 70% every year. Okay. These are the stock price goes. I mean, we are assuming that they grow by 11%, 12% every year. This is an average estimate. Okay. So this is how the investment works over years. Okay, so yes, you can take up short-term day trading, all the stuff, but again, this is one-time investment. You do it, you forget it, let it grow, generate wealth in your portfolio. You can have a separate account, do it. Okay. You don't believe me on the multi-baggers? So this is the screenshot from a book called 100 to 1 Multi-Baggers for Chris Mayer. These are the examples of the company he showed, how this company grew. We're only talking 10 times. This company grew like 300 times. Amazon grown 200 times since 97. Look at these examples. Priceline grew 145 times. Okay. CVS 2,800 times. So this is how long term works. Okay. Yeah, long term is boring. It's not exciting. It's a boring strategy, but hey, it makes you money without a lot of stress. Okay. And at Right Choices, we are going to provide the service as picks and everything of these kind of companies, high growth, high potential. And we are also very risk averse, and we do our research and we provide you the picks for these things. Okay. If you've not read the book, yeah, I highly suggest to read the book, read this 100 Backers book by Chris Mayers to understand how growth stocks perform. And you can say, hey, well, Warren Buffett is a value investor and he does not do growth stocks. How did he make a lot of billions? Well, it is debatable and somewhat misleading because Warren Buffett invested is in Geico and 80% of his returns are from Geico. Geico grew like in thousand folds since he invested. So Warren Buffett himself is a growth investor, right? So read about the facts, read about the books and everything. Okay, just don't go by articles written in CNBC or what they say on the TV on CNBC. Okay, sorry, I'm bashing CNBC, but I don't watch TV. I don't watch CNBC at all. Okay, so get the facts right. Make sure. See, Coca-Cola. Warren Buffett is a big Coca-Cola investor. He 868. He invested when it's a growth stock. Okay, so that's the reason we focus on the growth stocks. Cyclical, yeah. Uh, I don't care much. I don't. I care less about all that. So because I cannot chase all the stocks. I don't. I want to focus where my strengths are. That's what it is, right? I mean, if you know your strengths and you focus on that, you get better at that. Okay. So I do provide portfolio services. I do investments, and I've been doing not a hedge fund, but most of a portfolio manager with my friends and family money. And I started in July of 2020. It's not in the March, so I invested right here, and this is my portfolio year to date, and I have written off 43% on my portfolio. Yeah, it was 70% on February 1st, but it dropped down. Did I sell here? Did I sell at this dip? No, I bought here. I bought here. I bought here. I'm buying more. Okay. All right. So we just want to touch upon our long-term services. We just want to provide highly quality stocks, which has potential to be multi-baggers, and multi-baggers are very volatile. Remember that they can go up and down. And again, it has to be who you are. Amazon is trading today at $3,000, but very few people know Amazon actually dropped 90% in 2001. Okay, so it is not just up; it is up, down, and Amazon has fallen 50% four times until now. Okay, so potential, that's the quality of potential backers. Potential backers, multi-baggers is very volatile because they are growth stocks. They go up and down. Okay, we will also provide high level research on our picks. Why they ought to invest in it, what they are, what their motives, why this can be a potential bagger, or stuff like that. We also provide a guidance on how to position size based on conviction, and we try to provide two new stocks per month so that you can add to your long-term portfolio. Okay, I think that's pretty much I had, Kishore, on this one.
Yep, thank you, Nagesh. Great presentation. A lot of tips and a lot of great info on advantage of long-term investing and
Yep.
how to identify the companies. So yeah, definitely a lot of great inputs for all the members.
Yep.
So
Do you have any questions in the chat?
yeah, there are few questions. Let me go through one by one. You already took an example and explained about P by S ratio, right? You took a shop example.
Yep.
Yeah, let me unmute some of the members. Hey, Mr. Kalidas.
Yeah, hi. Do you hear me?
Yeah, we can. Yeah.
Yeah, okay, thank you. Do you into more of tech stocks or do you go into other sectors? Like I see travel is doing very good, right? Last.
Yeah. So yeah, that's where the concept is, right? Yes, I do. I'm a tech stock investor primarily. But again, airlines, travel, you have to understand again the growth, how much they can grow. Like if you take Delta, like it's already $1 billion company, right? So you have to look at the market size. You can look at the potential, how much travel, how much because after the pandemic, some of the key things you have to understand is the travel will reduce. The business, most of the all the airlines survive on business travel. They don't make money on traveling. You and me taking family vacations. Okay, that's not their business model. Their core business is business travel. Now with the Zoom and everything, after the pandemic, many companies are cutting down on travel. What does it impact on the travel business? They will cut down the travel too. They will not go. They'll not travel as like they were used to travel before pandemic. So obviously, airlines will suffer a lot in the long term. Although this reopening stuff is coming back up, it can be a good short-term trade. Like we can provide swing trades and day trades on that stuff. But on a long-term
Okay.
perspective, airlines are a bad investment.
Okay. Yeah, I mean, I think housing is also doing extremely good, right? Recently.
Oh yes, yeah, housing is kind of in a bubble. I believe. I think when people are chasing stuff, you better be careful. Okay. So yes, the lumber prices have gone up. There is a reason for that because the supply chain has broken due to the pandemic. The people are not able to supply the things to build the houses and everything. That the main supply has gone down. That's the reason prices are jacked up, and it is a temporary thing. And if you're making investment choices on that, be a little bit careful. Try to monitor those stocks and not go too much into the position sizing, and make sure you're taking your managing risk properly. Again, don't make decisions on what just because your neighbor bought a house by paying 20,000 extra on the asking price.
Yeah. Thank you.
Thank you, Mr. Kalidas. Hey, Shiva.
Hi, Nagesh.
Hey,
So I understand the long-term advantages but so how is your strategy gonna be? Like you're gonna suggest few stocks and we keep on buying and you give the entry points but not the exit points up until 10 years? Is that how it works?
yeah. So basically, our investments are long term. So so let me give an example. So I started in my services in July for my clients last July. The way we are doing is right now, up until now, we sold one stock, ticker called as AYX, which had which there are a lot of reasons for that, and we sold that. But again, what we do normally ask my clients is to give me 3 years to ensure you starts seeing returns and everything. But yes, when we do these services, we provide you the list of stocks that you can potentially be multi-baggers, and then you keep adding depending on the position size, like 1%, 2% over time. We ask members to wait until give it like 3 to 5 years to see the returns. And when we see like the stock is not performing or anything, it has gone significantly. Let's say you started with 2% and it tripled or 4 times, and now that stock is 25% of your portfolio, then you can take some profits there. Like for me, Roku was like that, and some other stocks was like that. So I took some profits along the time. But yeah, we will guide you along the way. But our picks will be, yeah, as I said, they will be volatile. Again, it's a multi-bagger. As you can see, all the tech stocks that I've done in the recent times. It can go up and down, but as long as the fundamental story doesn't change, we will not change our bias on that.
So Naresh, like if you suggest like 30 stocks or like or 10, 15 stocks per month.
Oh no, we don't. I don't suggest on that many. So I'm saying is we'll give you the initial list, right, to start with, and then we'll add 1 to 2 stocks per month to add to the portfolio.
Okay.
Hey, Mr. Sampath Garu.
But I think you're talking on mute. Kishore, there's a question: is it separate subscription or?
No, for now, it will be part of the current subscription. Maybe in future we may change it, but yeah, for now it is part of the current stock subscription.
Yep. So the basic idea is basically even though I started last year and I'm in 43% returning right now, I actually started a new profile in Jan 2021 just to prove that the stocks that keep on growing, that perform well, will just keep going up. So I'll be reviewing my portfolio end of the year and proving my point that why quality stocks just keep going up. So that's how we actually benchmark our performance comparing to SPY. How SPY we did in certain period of time, how our stocks did. Okay.
Yeah. Lakshmi Srinivas Garu.
I think they are talking on mute or something.
Yeah.
Oh, yeah, I'm muted. Sorry.
We can hear you now.
Yeah. My first question is like how many years or how much time do you guys take into consideration, while trying to find, the next multi-bagger which you're talking about? Like you can't certainly say, even though there are a lot of emerging markets right now, especially in 2020, we saw a few like EV and all those sectors you mentioned. So how long are you going to give a stock or a company to research and say that is going to be next multi-bagger?
So we already have the picks and we already done the research in most of those sectors. So right now we are looking at the more market volatility. Like you will not see returns what you've seen last year. That's
Okay.
not how the stock market works. As long as our goal is to make at least 20% a year on these stocks. Okay.
Okay. So and one more thing is whatever the portfolio you said that you will be sharing shortly. So is this the right time to buy, or should we wait for your first portfolio? And
No.
is there any minimum amount of portfolio that you are suggesting for your initial clientele?
So what I do normally is I do the portfolio sizing based on my conviction on the stocks, right?
Mm-hmm.
So I normally take, like, if you have like a $20,000 account and you are going to invest this month. So I say, okay, I have 5 picks for you this month. Okay, you take 5% in this, 3% in this, 2% in this. So that's how I divide my portfolio and go in with the 20,000. Or you can do it over the months. You can just buy one stock this month and wait for until next month. On the pricing thing, when to enter, there's no right time to enter any stock, as long as you think that's a potential bagger, right?
Yes.
So basically what I do is, like, the market has come down now, this week, last week, I added stocks. I added more to my high quality stocks. So that's when I take that opportunity and add more stocks. But this environment is a good time to enter, as I feel that this year will be like, I don't even know if this year will be great, even if you get 15% return at the end of the year because of the volatility, because markets have gone so much up last year. And incredible how it performed last year, it has to take a break, right? So investors will be cautious to getting the money into the growth. So right now there is a little bit of contention in the growth stocks because of people like Kathy Woods are marketing themselves on Twitter, sharing the portfolios in the open on the open to public. So some hedge funds are going against her. They're actually shorting her stocks. Nothing against the companies. This is a game that hedge funds play. Okay.
Okay.
Even the same thing happened to Chamath as well, and he went low profile on Twitter. So little bit careful when somebody posts like that. Just don't go all in with all your money because they are traders. Kathy Woods is a trader. She keeps on buy and keep selling stuff. Okay, she'll not. So if you're following her stocks blindly, you'll get into trouble, easy trouble with the position sizing and everything. So that's the reason we provide those services. We are here to guide you, to see what, hey, Kathy thinks this way. What do you guys think, or what do we do?
Okay, makes sense. And one last question is like, what are the current? Are you looking into any of these trends like NFTs or whatever for example, stocks like Roblox, which are very closely linked to tech
Yes,
platforms?
so those are IPOs, right? My thing on IPOs, it's like hiring a intern in your company. If you see your company, will you hire an intern and give him the critical job to perform? Obviously, the answer is no, right? You have to watch them, how they perform in the open market, like Roadblocks. Yes, it's a great stock. I looked at their earnings. They're making money. It's a very close stock, very popular with the kids. Yes, I mean, it's an IPO. It pulled back a little bit. I added 0.5% to my portfolio, but I'm watching that stock. It's in my watch list. So basically, I give like a couple of quarters because once it's an IPO, banks will sell their stock because they will get with the pre-IPO pricing, right? They take profits. After that, there is a lock-in period. Then others will start taking profits. So the IPO will go into the fluctuation cycle. Okay, you have seen Airbnb, you have seen Snow, you have seen other IPOs recently that went to market. What happened to them? Everybody came down, right?
Yes.
So you have to wait for that at least couple of quarters. Okay.
Okay.
So every IPO will go the cycle. I can give a number of examples how IPOs perform. So that's the reason I don't invest in IPOs a lot. I do swing trades on IPOs. Like if they enter, yeah, they can go on the hype, just sell it and just wait for the right thing. And then watch for their earning reports. How are they doing? How are they reacting in public markets? Private market is different. Public is different. Okay, you have to watch. It's an exam for them, right? If they perform well, then that's when you go, because once they perform well and you're paying more premium, yes, it might go up, but you build your confidence. Yes, this is going to perform, it's going to grow. Stock price doesn't matter, market cap does. The market cap is low, stock is trading high, ps low is low, just get in.
Okay, makes sense. And last thing, so the diversity thing in the portfolio, so how that will be balanced? So are you going to?
Yeah, so yes, if you're investing in the information technology sector, people say it's concentrated. Well, I counter argue that because it's not concentrated. We have industries within a sector. So if you look at, if you invest in Roku and if you invest in other growth stock like SE Seaworld, Roku is in streaming and SE is in e-commerce. They're already diversified, right?
Okay.
Or if you invest in Square is a banking company, or it's a payment company / banking. They already got a banking license now. So you already have 3 different sectors already within the industry. Just because they're using technology to provide the services, it's a misconception that people think they're all in technology. And the second reason is, as a retail investors, you are not a hedge fund. You don't have to hold stocks in every damn sector. You
Okay.
don't need to. Okay, because they have their own mandate. You don't have any mandate. You are a boss of your own.
Yeah. Yep. Thank you. Yeah, that's all I had. And yeah, I got all my answers. Thank you so much.
Thank you, Lakshmi. Sampath Garu.
Hey, sorry, I had a call, but anyway, Nag, thank you for the session. And Kishore, I always thank him for doing such great things. It's, somebody who takes time to do and thinks about others, advancement in financially. Nag, I had few questions. I think most of the questions have been answered. So you're saying long-term strategies buy and hold.
No,
So when do you actually
it's buy and verify, right?
buy and verify and then hold, correct?
Yeah.
So when do you actually reap the benefits of it? After retirement?
No, so basically depends, right? So you're investing long term of the
So
money that you
if I have
don't need
invested,
now.
for example, if I have invested in Facebook at like $20, now it is around $320. I would always think it is going to go up.
Right.
But when would I come out? What percentage, or I mean, is it
Yes.
maybe it's
So
a personal thing?
the rule I follow is basically if any of my stocks goes about 25% of my portfolio, I will trim that stock to 15% or 12%,
Okay.
and then use that money to invest in other stock that can grow 25% again.
Okay, got you. So how do we find companies like Facebook now that there are so many things, for example, Peloton or Fastly or anything? How do you find that? How do we know that this company would be another Amazon? How do you make that decision and
So I
which?
think there are multiple factors. I think one of them, I think I listed in the slide. So basically, keep searching them, make a watch list, identify the revenue growth is very key in these things, right? What they are trying to build, right? Like you bought a Peloton. Peloton is one of my favorite stock. I mean, I did not understand Peloton when it was $30. I thought it's a fake. it's a fad. I did not understand if it was trading at $90. But actually, I understood that company. That company is going to be Apple of fitness.
Got you.
I mean, the way they're doing the business, I got in at $140. I bought it in 140. I bought it in 130. I bought it 120. I bought it $90 also.
Okay.
And that I did my position sizing. I started at 1%. I had 1 more%. So I don't feel like, even if it is down, I am able to sleep nicely because I don't feel the pain.
Got you.
But that I think it will go 5 to 7 times.
Okay, good. But it's a time, I mean, patience and positioning.
Oh yeah. Yep.
But again, let's say if you have your, I mean, you also need to generate money from other sources to be able to buy more, right? With your salary or fixed income, it's not going to be possible. How do you bridge that gap?
So normally my personal thing is I invest every month, right? So whatever is not after my cost and expenses every month, whatever is left over, I don't put in savings because that's the money I don't need. I put in and keep buying. I keep buying every month. And sometimes I buy one stock with the money I have.
Gotcha.
So that's how I build a portfolio. So it is a retirement portfolio. Let's think of that.
Gotcha.
But the returns will be much more than what your 401k will give you.
Gotcha.
Okay. Cool. So you have to have that vision. So again, this is something you do on the side. You don't have to worry every day, right? You don't have to take 10 different trades to make money, and you don't have to pay taxes on the overtime. If you hold stocks for more than 1 year, you'll be paying only 15% tax. And I do mine in IRA account, so I don't even have to pay taxes on the gains.
Oh, gotcha.
Okay, so for example, if you change 4 jobs in the last 10 years, you have money sitting in 401k on your employer's peers. Get that money, push into IRA, invest in these stocks.
Correct.
But that the money you're not going to anyway use it until 65 anyways.
Correct.
So my suggestions, start with your IRA, build a portfolio in that, see how it is performing. Then put your brokerage money, your regular savings, right?
Got you. Okay, cool. Thanks a lot. I usually do day trading, but I will think into this also. I mean, I do some of the long terms, but not heavy into long term stuff right now. I do 90% because I can afford to take some time to do day trading. So that's yeah. Okay, cool. Thank you.
Thank you, Sampreet. Hey, Mr. Raf.
Thank you, Kishore Garu. And thank you, Nagesh Garu, for providing this great knowledge. I mean, it's been great, very insightful. So I have a question regarding in one of the slide. I know I've asked this question and I think Kishore Garu responded. And one of the slide you have, when you start a position, you also have a stop loss being mentioned. So for a long-term investor, the stop loss really.
Yeah, that's one of the option, right? So either you can do the position size with a stop loss saying, okay, let's say you are not very highly convinced of the stock. You're just playing around with it, right? So you can do the stop loss. Let's say it already went very high on the chart. It's all time high. Now you're feeling, oh, it's already all time high. Should I buy here? Maybe it'll go up, maybe it'll not. But let me try it out and see. Test the waters kind of situation, right? You can use the stop loss, and if it hits your stop loss, comes down, and then you can wait for the re-entry and get in there.
Got it. And I know you said, sir, since last June or July, you had one position where you had exited, right? Was it a loss or was it like, break even?
Yes, it was a small loss. So it's an AYX. So what we did, I actually monitored for 2 quarters. The first quarter itself had a red flag. So I sold half of that in profit. And then second quarter, it has proved my doubts. And I sold the entire portfolio. But key thing is, during this time, I invested in Roku another 8 stocks. Okay.
I see.
They went up like multifold. I didn't even realize this loss is a loss. So that's all matters. Even if not everything will be winner. No way. Even if you day trade or swing trade, not everything will be. My goal is to make 70% winners, 30% losses, but 70% will give you 170% gains.
Got it. And in your portfolio, I know you mentioned about tech-driven financial, right? So do you have any specific financial like Goldman Sachs or JPMC?
No, I invest tech financials like Square.
Got it.
Square is one of my favorite company. There's a very innovative.
Yeah, it has been. Yeah, I think it's gonna go up more.
I got in I got in around $100. I bought in again at high. Right now $200, I think.
Yeah.
Because I believe in the founder. The Twitter. Yeah. So those are the key things you have to look for. Why I'm investing there. Square will be the bank of the future. Your kids will not go to the physical bank anymore. They'll use this.
Yeah, I started the position before this earnings. It was a good decision that I made.
Yep.
Yeah. Thank you, sir. That's all for my questions.
Ram Garu.
Yes, Nagesh Garu, thank you so much. Kishore, thank you. So Nagesh Garu, how you've been trading for how long?
Trading since 2008. 2008, I believe. Yeah.
Okay. Well, I mean, typically, what have been your returns during this time? You only started going with your folks in July 2020. So what have been your returns since 2008?
So basically, I was in my IR in a 401ks. So I'm doing mutual funds and everything. So 2016, I started looking closely in Nasdaq. So I did have Apple, Facebook at that time. I recently sold those positions, and my personal profile is still with me. Again, I do these services with my friends and family money. So I think the last 3 years, like 2017, we started a revolution of these new trends, like what I mentioned in my slides. The digitization of the world is a new one. So I bought shop I think around $200 or $300 in 2017 or 18. Okay, I bought shop again at $1,000.
Okay, got it. My question, go ahead.
So I think so. As long as for me, it's the personal returns perspective, I do it in my 401k and IRA. So it's been doing pretty well for me. Yep.
Okay. I mean, typically on an average, what kind of returns were you getting?
I would say for the last few years, 18 to 20%. That's what my target is meeting. Yep.
All right. And then this other question I have is, do you take over 401ks and manage those?
No, I do not. I don't manage any. I do not manage any of the accounts. Your accounts.
Okay.
So we basically fund it in a pool or something. But yeah.
Got it. Okay. Thanks, Andy. That's all I had. Thank you.
Thank you, Ramgar. Hey, Mr. Muneshwar.
Hey, thank you, Nagesh. One question I have is, I know you mentioned to look at the market cap.
Yep.
Are there any other fundamental indicators that we can look at? Like some people say price to book.
Yeah. So I think to start with, I think that there are only three things, right? The market cap, your price to sales ratio. It is a new one. I think the price to earnings is a pretty old one. I think people are not gauging that anymore or using that. Price to book is more fundamental. I think it's a bookish kind of value, which nobody cares about. So I think the key thing is, again, I'll repeat a broken record on this. It's a revenue growth. So as long as they keep the revenue keep growing, right, your stock price improves. So that's the reason when they announce earnings, they beat the market by, I don't know, certain number of $1 million, right? Then the stock price goes up like 10-15% up. That's when the market cap goes up, because you know the formula for the market cap, right? Market cap equal to stock price times number of outstanding shares.
Correct.
Okay. So the lesser the market cap, the higher the earnings, the better the stock is. Okay.
So that's called bottom fishing or something.
Sorry.
Is that called bottom fishing?
It's not bottom fishing. It's a company's evaluation. That's what matters. That the chart I showed you, right? The revenue growth is a key over long term.
Okay.
So that's what matters. That's a key thing. Most of the investors, most of the growth for the growth companies, that's what matters. They have to keep growing. That's the reason they're called growth companies, or else they're called value companies, like the Coca-Colas of the world. Nobody cares if Coca-Cola grows or not, right? As long as they're paying dividends and it's a value stock. They keep on doing like 20 to 25% revenue growth on a year-over-year basis. But the growth stocks, you're investing in the future. What this company can become, like a Tesla. Why do you think Tesla is trading so higher? Because they think the future is very bright, but they're a shitty company right now with the earnings and everything, right? But the investors' bets are on the future, not on the current. So every earnings report is not about the current report; it's of the future, what they're going to guide on the market on. Okay. So once you identify that particular business model, that is a key to understand what the potential of the business model is and how disruptive it is to the market.
Right. And when do you think the stock price for that company has saturated, like you said, cannot go like Roku does or Shopify does?
Sorry, what? I didn't entirely get the question.
So when can we decide that?
Maybe I think the exit. When do you want to take profits?
Oh,
from the
profits. So as I told you, right? So once you have portfolio, if you started with 3% of the Shopify, let's say you have 3%, you started it when it was trading at $100. Now it is $1,000. Now it become 25% of your portfolio. Then I would take 50% off on that.
Okay.
So remember, I think my chase is for the multi-baggers, not some stocks which can go 3 or 4 times.
Right.
Because in my current profile already have like 2 or 3 stocks which are done 2 times. So I'm still holding it. I still added actually. So that's a conviction, right? You keep on adding. Why you want to sell your winners? You keep your winners, you cut your losers. Okay. And 90% people do the opposite side. And again, when you're doing long-term investments, think of the money that is not required for you now to support your lifestyle. Like I gave an example, if you have money lying in your previous employer's 401k, you better create an IRA and start investing on your own.
So revenue is what we should look at, and the price to sales.
Price to sales and the market cap. Yep.
Okay. That's all I have. Thank you very much.
Thank you, Manishwar. Mr. V.K. Rao garu.
Sure. Thank you, Kishore Garu, for a wonderful session. Nog, the information is awesome. Thank you. I have 2 to 3 questions. The first is, portfolio management means how it works out. Like I need to tell you first 25 grand I'm putting here and today is the start, or if already I accumulated some stocks into that, do I need to sell all those things and get your recommendations? How it works out?
Yeah, I think I would start fresh. I mean, what are your investment you have? I mean, if it is not bothering you, if it is,
Okay.
if you're awake at in the night and it's bothering you, I'll review those portfolio. But
Okay.
as long as it is okay, you keep that. But you can start with the fresh capital.
Okay.
And I'll also share a link where you can actually do how the SPY, how the returns are and everything. So normally, yeah, everybody cannot. I mean, everybody cannot invest $10,000 every month, right?
Yeah.
So in the long-term portfolio, even if it's like $1,500 a month, right? You can, after your all expenses, instead of keeping in your savings account, we recommend to put in the stocks, and 1,500 if you have 5 stocks, divide in across all the stocks. Don't put everything in one.
Okay. How to start the portfolio management with your recommendations?
Yeah, I think we'll be start launching that soon. I think we'll have more information on that. We'll start sharing the portfolio, and we'll provide guidance on why you have to invest here and how much you have to invest, like in the portfolio size, percentage wise.
Sure, I will be waiting for that. I'm the candidate for that. I'm really waiting for Kishore guidance on portfolio management for a while. So you can consider me. Thank you, sir.
Thank you, Mr. Ashish Jogeshwar.
Hey, hi Kishore. First of all, thank you. Thank you, Nagesh, for this wonderful session.
Yep, thanks.
I had a couple of questions. So the first thing is, Nagesh, you say you're investing in growth stocks. So in your personal portfolio, do you keep the big players also, or it's?
Yes, it's a good question. So basically, as I said, right, your portfolio should represent who you are, what your personality is. So if you're a person like cannot stomach the volatility of growth stocks, which are very volatile, if you can see Roku was at 480, it came to 284. Can you handle that, right? Is a question. Yes, you can handle that if you have 10 stocks of growth of Roku. Fine. If you have 100 stocks of Roku, then that's a problem. So yes. So what I normally do sometimes to my clients is basically, if they're very risk averse and they're a little bit hesitant to put everything in growth stocks, I normally do a split, like 60% high growth stocks, 30% in like what I call less volatile growth stocks like Amazon, Facebook, and everything, and then the rest in the value stocks. Okay. So that will help the portfolio balance it out. And if you guys want like that, we can do the portfolio matching like that as well, including high growth stocks, was already grown stocks. But so these already grown stocks like Amazon, Facebook, they can grow, but not to an extent to other growth stocks, but they'll always beat SPY. So SPY is our benchmark, right? That is our competitor. We always have to beat that. So when you beat SPY, you get alpha, right? So it doesn't matter what kind of trading you're doing, day trading, scalp trading, options, what doesn't matter. At the end of the year, your PNL should beat your S&P, SPY. If it's not beating SPY, you're underperforming. Okay.
Got it. That makes sense.
Yep.
So I think that was a very good answer. And then I had one more question. So Kishore, how I think this is more directed to Kishore. How will we move forward with this? I understand it will be a part of the stock group itself.
Yeah.
So
Still me and Nagesh, we are discussing on this, but for now, Nagesh will be providing these suggestions whenever he sees some good growth stocks where they can become multi-baggers. He will be sharing it on the stocks group. We'll say like it is a long-term stock provided by Naresh.
Yeah. So basically, what I'll do is I'll pick up some 4 to 5 stocks for the start, and share the profile Excel spreadsheet with the percentage how much you have to allocate each stock, and then based on your capital, you can start from there.
Okay, Nagesh, I have one last question. Do you also suggest doing a Roth conversion?
So what I did with my personal thing is I converted my previous employer's 401k into IRA.
Yeah.
and then use that money and invest it into that.
Okay. Got it. Yeah, I have done a similar thing that I took out my previous 401k.
Yeah, because
and
the
I
idea
created an
is
IRA.
the idea is we don't need that money under 65, right? Anyways, so
Yeah.
why not? Why you have to put in mutual funds with the 401k with 10 to 12% growth? So that's the risk I took.
Okay, got it. Yeah. So no conversion from Roth IRA to sorry, not from your IRA to Roth.
No. I
Okay,
just put
got it. All right. Thank you so much, Nagesh. It was very informative.
Thanks.
Thank you, Ashish. Hey, Mr. Bharat.
Yeah, thanks, Kishore. Can you hear me?
Yeah, we can.
Yeah, thanks, Nagesh, for the session. Like, yeah, it's very insightful and informative. So I think most of the questions have been answered. But thing is, I mean, coming to the services, like mostly like to Kishore, like we were talking about two things, right? If I understand, one is like portfolio management, and the next is stock recommendations.
Yeah,
Is that my understanding right?
that is right. Yeah. For now,
So,
Nagesh will be sharing the
Yeah.
recommendations. And once we finalize all the portfolio thing, how we need to do, we'll share those details.
Yeah, the portfolio service will be separate, so we'll be reviewing your
Okay.
portfolio's recommendations
So,
based on your thing.
okay. For portfolio management, like how much minimum you are looking to manage? I mean, give us suggestions on that.
So right now, my client's portfolio is around $1 million managing. So it
No,
depends.
maybe he's asking like individual, how much should
Oh,
be.
Yeah, individual, yes. To manage that portfolio and individual recommendations, like how much you are.
I think there's no set recommendation. If you start that service, I think sure we can talk about more on that. But we'll provide more information on that, Bharat.
Sure. Yeah, that sounds much. Yeah, thanks a lot.
Thanks, Bharat. Hey, Vijay.
Hey, thanks for the session, guys. It was wonderful. My question is like, at first it all looks exciting, like managing by ourselves, but if you're not beating any standard, ETF or mutual fund out there, is it worth to take, this much risk, right? It's number one. And number two, if we are investing heavy on tech, why compare with the SPY rather than Nasdaq or Nasdaq 100, right?
So yeah, I think that's a good question. So basically, the portfolio, your risk appetite should reflect who you are, right? If you're a person who wants to just have ETFs and happy with those returns, yes, this might not be a service for you, right? But if you're a risk taker, want to gain knowledge as you're investing, it's not about we recommending services, right? We want you guys to educate also, learn and ensure that you're able to manage your own portfolio one day. So you keep on learning this stuff, because you have to know what's actually the investing is all about, how these people make money. They are not born geniuses. They just follow certain rules, they just follow certain principles, and that's how they trade upon that. And if you cannot stomach the volatility and all that stuff, you cannot sleep at night, then yes, there is always a risk. There's always risk with ETFs. There's always risk with investment in general, right? The S&P can go down like in pre-pandemic. What will you do at that time, right? So so basically, my question would be, why did you invest in that ETF when you know it can go down like it did in the pandemic? What would be your reaction in that situation? Would you sell, or if you had more? So it depends on your convictions and what your personality is. Yes, there are multiple options, but again, you have to do the pros and cons on the way. Again, our investments, doing personally, will definitely yield more returns if you are investing in right stocks, doing the right due diligence. If you go and invest in random stocks, and if the market is going up and you're going down, that's something wrong with the portfolio. If the stocks is going down along with the market, then you're in the right boat.
So you said the objective is to learn, right? So how much learning will be involved? You said it's an alert service, so you're gonna give like your conviction as well as
Yes.
the learning along with the recommendation.
Yeah. So basically, what we do is when we provide the recommendation, we'll provide a 1 to 2 pager documentation
Oh,
on
I
each
see. Okay,
stock.
okay. Yeah, that may be
Then you can do your own due diligence. We can tell you,
research.
hey, today's earnings, go and listen to the earnings call, learn to see what the CEO says, right? Hey, there's a report
Okay.
study.
Yeah, I think that totally makes sense. The other one, like, I'm curious on this thing. If you are a heavy tech, then, why should not we
Yeah, I
compare
think
with Nasdaq 100, right?
yeah, you can
Or
compare it with the Nasdaq 100, but I think within the tech, we are focusing on certain industries, right?
diversify.
Like
Okay.
the Roku is a software as a service industry, or SE is a e-commerce within the
I
tech
see.
industry.
So the one that you're going to recommend is going to be off of the Nasdaq, right?
Yeah.
Or is all going to be Nasdaq primarily?
Yeah, I mean, if you look at that way, right, S&P itself, the weightage of tech stock in S&P is more than 30%. Okay, so if you look at that perspective, S&P tech stocks dominate everywhere.
Okay, yeah, that's true. Yeah, I think I got the picture. The goal is to learn and then manage self and do better. Okay. Yeah, I didn't know that the write-up part, so that's great.
Oh, okay.
Yeah, that's really going to help for sure. Thank you, guys.
Thank you. Mr. Rajay Garu.
Hello, Andy, Kishore Garu and Nagesh. Thank you so much for a valuable session. I'm learning every day, and today is another impressive day.
Yep.
Nagesh ji, if you could, would you please elaborate on that P by S? Is price to number of shares, you said?
It's a price to sales ratios. Basically, the formula is you take the entire market cap of the company and divide that by company's total revenue for the last 12 years. Okay, so you'll get a number like 30, 40, 60, 70, something like that, or 40. So the higher the number, the more value the company is. Like that's the reason when CNBC chat heads say, hey, this company is overvalued, that means they are doing this calculation like P by S or P by E. They're saying, oh, this is trading like 80 times, it's overvalued. Normally stocks trade around 30 to 40, they're considered to be stable stocks, right? So once this goes above 100, then every eyebrows will be lifted and says, oh, this is overvalued. Let's see what's going on with this. But there can be a damn good reason why they trade like that, because investors are willing to pay that premium for the company that has been executing on its deliverables. That's what it means.
So price divided by number of shares is P by S.
It's called price to sales ratio. It is market cap divided by the total revenue for 1 year.
Oh, okay. Okay. I got you. Thank you. So as a stock value continue to grow and grow, that number comes down every year?
Yes. As I see in the Shopify example I took, right?
Yeah. That's what I was.
So initially, all the growth stocks will be very high because of its volatility, and the investors keep betting, right? Oh, this has a lot of potential, like Tesla. I don't know, it has like 400 times PS. It's crazy, right? So, but it is in that range for a long time. And then so many people have tried to short it, but what happened? They all got burned.
Oh, okay. All right. Is that P by S ratio is available on standard websites?
If you go to finance.yahoo.com, go to statistics tab, or search for a sticker symbol, go to statistics, it will be under there. A lot of information there. I mean, Yahoo is one of the best sites, but nowadays they're asking for subscription for other information, but yeah.
All right, thank you. And one more clarification is, when you're picking a ticker that's for a long-term growth, a future growth as good as the FANG stocks, what are other criteria you look into in addition to P by S?
Yeah, the other fundamental things I look at the TAM, the total addressable market. How big is the business model, right? Again, I go back to Roku, the streaming services. Nobody understood initially; they thought it's all hardware, but they were building the software under that. Okay, they're building an operating system for the smart TVs. Imagine the TAM. Every household will have a TV, and they are including it into the TV set itself. So they're still in the US markets only. They are still not gone global. Amazon is already global. but they're not making big impact in terms of what is it, Fire TV, or what do they have that, right? So I look at the address and their innovation, how they're coming up, the founder, who is running this company, and ultimately I look at the revenue growth.
Okay, okay.
So
So
I
you will,
pick the leaders in that sector
okay.
because they tend to perform well, and you have to pay more price to own the stock. Yes, then nothing is cheap.
Okay. Thank you. Appreciate it.
Thank you. We'll just take another. Mr. Bari.
Hi, thank you very much. Thank you, Kishore and Nagesh. Quick question. You mentioned earnings, as long as they're growing, it's trending in the right direction. What would you say to the price to earnings? And I've also noticed sometimes the stock price takes a hit, even though earnings are good. So do you look at quarter to quarter or year to year, or what other mix of things?
Yeah, I do look at quarter to quarter, follow closely. I make sure earnings are growing. That's one thing for sure. Stock prices do take a hit for multiple reasons. Even the earnings are good, stock prices go down. Even if sometimes earnings are not that great, stock prices keep going up. So earnings is only a report card that the company gives to the market. That's the only time they speak to the market, right? The CEO and the CFO, everybody on one call. Now, once the report card is out, the investors will not look at what the report card is saying in that situation, but they look at what is going to be happening in the future. The guidance is important. Yes, they may have had a bad quarter, but they will give a reason why they had a bad quarter. Is it because of the general reasons like the economy, or is it specific to the company, or something they messed up? They changed the CFO, or they did something, or they were not able to add customers at a pace that the market expected, and what they're going to do future. So those are some of the key things. So the reasons can be different based on what they report to the market. And then I give like a couple of quarters to see if they can improve or not. Then I will be a little bit cautious. Maybe depends on when cutting the position size, or be cautious about that stock.
Okay, thank you very much. And Kishorji, I have a question for you. Is this going to be available on Right Choice on the platform itself, on the Algo platform, or is this a separate service?
This will not be on the algo. We have to still develop an algo for this thing. But yeah, for now, it will be, Nagesh will be sharing these recommendations as part of the stocks premium channel. And once we come up with the strategy, whether we need to automate it or whether we need to build some portfolio type of thing, we are discussing on that, and we'll let you know.
Okay. All right. Thank you.
Yeah, thank you. Hey, Mr. TI.
Sorry, I missed the early part of I think I missed the first 3-4 minutes of the presentation. First question is, will this be available for reviewing at a later point?
Yeah, we may be doing this session again, maybe after 2 or 3 weeks. But
Okay.
yeah, we won't be sharing any recording or anything.
All right. And the other question I have is, so from what I've understood, it's a long-term game, or a long-term approach in this case, right?
Mm-hmm.
So as we know, market conditions can change. Again, I don't know what the time frame we're looking at. It could be 5 years, 10 years, or maybe in between. And at that time, let's say my horizon is 5 years. And at that time, if I want that money, the conditions may not be conducive for me to sell and get my investment and profits back, depending on what the market does. At nobody expected Corona last year. So likewise, things can be 5 years down the road. We don't know how the market would be, right? So how do we, I understand growth stocks, we pay a premium, but they can take a hit too, right?
Yes, so they can take a hit too, but I think imagine how much they can grow in the 5 years, right, from your entry point, right? So at that time, if you take a hit like Amazon, it was trading at what, $2,000 before the pre-pandemic. It went to 1,800, 1,600. But people who have gotten into Amazon 8 years back were not worried about that drawdown, right? And as I said in my slide, that S&P corrects 10% every year, give or take, in different times, and it will correct 20% every 5 years, and more than that every 10 years. So that's statistically based on the numbers and how the S&P has performed. Yes, I think again, if your time horizon that you have defined, and you have to closely monitor your positions. Like I said, if some stock is going 25% already grown, then it's better to take profits, right? And manage the
Right.
portfolio. So, and like the same question I can ask, like in the 401k, if you are close to retirement 65 and the market tanks, what will you do, right? All your investment will go down anyways. But what is that relatively to your starting point is what's important. Okay, if the stock has grown 500 times and a pandemic happens or something drawdown, something like this happens, it came down 200%, but it's still on profits 300%.
Yeah. So I think where I'm trying to grapple with is we have a universe of about 7,000 stocks. Amazon is a great example, and people who have believed in Amazon story early and stuck onto it, I'm sure they've become multimillionaires. But how do we know the ones that we are going to pick are going to be next Amazons, multi-baggers? It's hard to say. Nobody has that crystal ball.
Right. So basically that's where the company's business model comes into picture, what they're trying to do and how that is compared to the trends that are going on. So how did Amazon get what successful? Because of the e-commerce platform that was actually building at that time. Nobody did online shopping as much as we do today in 2005, right? So Amazon came in at 2008, late 2009, and they built this platform, and they were building in 1997, and the stock did not perform well during that time, right? So one of the slides I talked about the key trends that are trending in this particular environment, or the digital, the EVs, the AI, and everything. So these investments keep growing, and even the crypto space. I mean, there's a lot of stuff happening. These are the trends that you identify, and you pick those stocks within that trends, and ensure and follow those companies, like the founder-led companies, which have great vision, like the Twitter CEO who runs the Square Capital. Everybody thought Square was just a payment services. Look how much he has grown that company. Look from where he has gotten that. The Square was trading at $40 at one time to now $250. So you have to imagine all the circumstances. Like, since Amazon has already become big, doesn't mean that people are sitting idle and not innovating. There are a lot of stuff growing, happening nowadays. And if you look at companies like Fiverr, FIVER.com, go there and check how much they're changing the economy in terms of services that you can provide. If you have a skill, you can register on their website and you can get a gig. You don't even have to work full time these days. Okay, so you have to know what are the trends that are happening around you. There's a lot of stuff happening. I can have a separate session for that, but imagine Amazon is not the end of the world. There are certainly going to be more Amazons coming up.
Yeah, definitely. I think where my point was, like, for a company like eBay, just I'm taking eBay as an example. For a company like eBay to be successful, there are many like UBid that fizzled out. So there will be only one or two winners emerging out of any new
Yeah.
trend. Right?
So my picks are basically the leaders I'm picking within that group.
Okay.
So once you're the leader, then they're more successful, right? And you pay the premium price for those leaders. So there are so many payment companies. I'm not picking all the payment companies. I'm just sticking to Square.
Right. Okay.
Okay. Similar to the e-commerce, like you said, Amazon's, right? Amazon is only in the US. Amazon's international markets are not that great. If you search on SE, ticker symbol SE, it will be the Asian Amazon of Asia. Check what they're doing. Amazon is already present in Asia, but it's not making anything. They're not able to even scratch the surface of Asian market. There's one more stock, MELI, MELI. It will be the Amazon of Latin America. Okay. Amazon already has a presence of that. They don't have any revenues. MELI is leading that industry. Okay, so these are some of the characteristics you always have to look at.
Right.
Okay. Check on the
Okay.
stocks. I mean, you don't have to take my word. Just search SE and MELI and compare that with Amazon.
Yeah, MELI is Mercado Libre, and yeah, I don't know about SE, but yeah, again, these are regional players. Even before Amazon made entry, they were there. They had that first mover advantage and home ground advantage. So all of those would have played a factor into all of that, I would think. Likewise, Amazon not being a success story outside of US can be attributed to many things.
Yeah, because there's a reason why they are not successful, right? Why is Apple not successful outside the US? So the same thing. So every region will have their market shares, their competitive advantages, and you have to just bank on that and build your conviction around that. Right? And you can diversify. You can put your 25% in Amazon, 25% there, 15% in MELI.
From what I've read, Amazon made more money on AWS than their own e-commerce platform.
They were always a loser until AWS picked up.
Right.
That's the reason why their e-commerce business is lost, because they are working on very razor thin margins.
Yeah, we'll go to the next one. Already we are like 40 minutes more than the planned time. Has Mr. Manish?
Yes. Yeah. Thank you, Kishore. Thank you, Nagesh. Nagesh, you were talking about like using the 401k and transfer it to an IRA and use it. I had 401k from my previous employer, and I took it out and moved into betterment.com. I think they started somewhere in 2017, and that's where I started, right? It's kind of a robo investment they do. And it's giving me like a 10 to 12% annual return so far. But the way I understand, right, you're talking probably that might not be the right option to park your 401k. So do you have any suggestion or recommendation like how I can best plan it, and which IRA platform to use if I have to move out?
It depends if you're doing betterment.com. Is it a robo investment?
Yes, that is correct. Yeah, they automatically, I have to select the risk level and they automatically invest. They do tax loss harvesting. But yeah,
I
they
think
have given like 10% interest so far.
So it really depends on what your current returns are from that robo investment, right, compared to the market. And
yeah, they have given like a 10 to 12% annual return so far. I'm using them from last 4 years. So
it again depends. If you're happy with that, just stick with that, and you can start a new profile with this kind of investment and see the returns how you are getting here, and gradually make a move. So
no, the way you were explaining, right?
If you're ready to do that, then I think you should convert that into an IRA, a personal IRA account on Fidelity or any other major broker.
Okay.
Then transfer your funds into that IRA.
So today, like Betterment also invest in stock, but I don't have a say like where they will be investing. So the way I understand is, right, I should move that money to a Fidelity or different IRA, and then I can probably choose which stock I want to invest in.
So you want to use the betterment.com platform and invest in this new
No, I will move out from that, right? Because it looks like they are not giving enough return the way I listened to your session. So that's what I was looking.
Yeah, you can start an IRA with Fidelity and move it over and start the new profile. Yes.
Okay. And in Fidelity, we can choose our own stock, right? Like Apple, Amazon, whatever.
Yes.
Okay. And over the period of time, you think like based on the past performance, I know it's not guaranteed, but Betterment is giving 10%. But based on your experience and past things, right? Do you still feel it will probably a better option?
Yes, that's what I was in. My target is to get to 20% per year. With the
Okay.
profiles.
Okay. Got it.
But it is not like 20% every year. Right? Sometimes it's up, sometimes it's like 30%.
No. The risk is always there. I understand.
Yeah.
Yeah. That will always be there. Okay. Okay. Thank you, Nagesh. Thank you.
Okay.
Mr. Vihari, Vihar.
Hey, a few questions. So how do you guys like manage and change your cash position based on the market conditions, right? So for you to deploy when the market is down, for example.
So I think I normally follow the market every day. I mean, I also am a long-term in, but I also do trading on a daily basis as well in separate accounts. So whenever there's an opportunity, looking where the drawdowns and everything, I always keep cash in the account. So even if I transfer, like say $10,000 into my account, I don't completely invest on a single day. So I normally keep the cash on the side just to grab these opportunities when there's a dip I buy. And I use some technical analysis as well. So if it is testing some big moving averages like 100-day or a 50-day moving averages on SPY, then I choose to add those situations. Or if a company had a news and it fell down, like Peloton had this recall last week and the stock took a tanking, all I did was added more to Peloton.
Got it. So what percentage of your total portfolio is cash per se to react to these
I normally
drawdowns?
keep like 12 to 15% in cash. I also add every month into my trading account from my savings.
Got it. So it's not something like, hey, you're expecting market to go down, so maybe you'll increase your cash position to maybe 25%, for example, versus let's say 5% when the market is pretty hot.
Yeah, I mean, if I have cash sitting in the savings and I see an opportunity like pandemic opportunity, yeah, I might deploy more cash in that situation because it's a discount sale, it's a Thanksgiving sale, right?
Correct.
So again, I don't try to time the market. I'm a strong believer, like as they say, the time in the market is greater than timing the market for a long term.
Yeah, that makes sense. But I'm just trying to understand if that's a strategy in the back of your mind as well.
Yep.
Okay. Yeah, one more thing. So how much do you use like selling puts as one of your strategies or like buying leaps?
I normally do sell puts when I see like in an opportunity to grab the shares, but I'm not sure if that price goes there or not. If it comes to that my price point, then I'll take it, or else I'm happy with the credit. I normally buy leaps on a very beaten down stocks, like I bought recently, I think Fastly or something, which was oversold. So I look at those opportunities.
Okay, so but what percentage do you pick as stocks versus like selling?
No.
Or is
I
it
normally,
completely in a different account altogether?
It's a different account.
Okay, so you don't want to mix like your long-term
Yeah, because
portfolio
the
versus...
problem that is the price, the PLN fluctuation, right? It's a very emotional thing, so I keep it separate.
Okay, so you don't use selling puts as a strategy to buy discount stocks at a discount even for your long-term portfolio.
Right. Yeah. Not much.
Okay. And one more thing. So
There
how
are
much do you? Sorry.
Yeah, there are a few more members already. We are like.
Okay, I'll just end with the last one. What percentage of your picks are like micro caps?
Right now it's around 2%, I believe. I have a couple of stocks, I think.
Okay. Okay, cool. Thanks.
Thanks, Vihar. Hey, Mr. Srinivaskar.
Hello, Kishore. Thanks for another good session for the financial literacy. And I missed the first of presentation. I was late. So Nagesh was, thanks Nagesh for this all. I'm just hearing all other people's questions, trying to learn. So my question is, Nagesh, are saying that you taking your 401k and converting into IRA and so investing. So some people suggest convert that IRA into Roth IRA. So I'm kind of in couple of months going to get into that situation. I would like to know what is the best situation, best thing to do, whether to convert into IRA or convert IRA, then followed by converting to Roth IRA.
I think both are equally good. I mean, there's some variations in both of them. I think it depends on the tax-free versus the taxable thing on the IRA thing.
Right.
Yeah, so I think but in both of them, you can choose your stocks individually and invest in them. It's just a difference between how you handle your tax situation depending on where you are and how long you have for the retirement and stuff like that. But I mean, from a return standpoint, I think doesn't really matter. But whichever way you're convenient, you can choose it, or you can talk to your tax consultant. They might have a much more better idea based on your goals and everything, and where you are with your retirement and everything.
Okay, thank you so much. That's all, Kishore.
Thank you. Hey, Mr. Vinay. Vinay, are you there?
Hey, I just missed the initial part of the session. Can you please give a little background about yourself? Like,
Yeah. Vijay Garu, we are already late by 50 minutes.
Okay, I thought it's for me. Okay, good.
Hello.
Vinay, yeah, please go ahead.
Hey, yeah, can you? Yeah, so let's say if we go with the service, and in future, let's if Nagesh sir decides to move out of the company, like what will happen then?
Good question. So I think I'm not the only one long-term investor here, right? We, within the group of analysts, we always contribute and share the knowledge. So we share all the fundamentals and how we do the process and everything. So certainly there are a lot of other smart people within our company. So we can keep continuing servicing this. That shouldn't be a problem.
And also Nagesh is trying to educate you also, right?
Yeah.
We are not keeping the dependency. We are educating you, sharing the documentation, what all you need to look. So yeah, before he leaves, you might be
you an expert on that.
Yeah. Mr. Piyush.
Hey, so one quick question. That today you said that the long-term investment is clubbed with the normal stock premium channel, but tomorrow if you decide to split, then what will happen if somebody is subscribed with the intention that I'm getting both, or at least what will happen to the existing subscriber if some of the service gets split into new paid service?
No, basically we'll be still sharing the long-term picks in the channel, but only thing if somebody is looking for that portfolio type of services where they want to understand, right? Somebody has a 30K, they want to get more details on, okay, if I have 30K this year, I'll be adding some $500 each month to my portfolio, to my long-term portfolio. So all that is like totally an additional service, right? So we'll be still sharing the long-term picks in the stocks premium.
Okay, and in that stock channel, whether it is long-term or the stock premium, is it like a flow of messages, or there will be fixed messages in a few days? Because I mean, I assume most of the people here on the calls are in the job, 9-to-5 job, and I'm just wondering that, is it the trading tips comes like, okay, buy this now, and half an hour after that sell it off? Is that how it works, that channel? Or?
All right. We have day trading, scalping, we have swings. So everything will be identified. Like if it is day trading and scalping, we mention that, okay, there is a day trade and scalp. Or if it is a swing trade, we say that, okay, it's EST, right? Buy it so and so point and selling it so and so
Okay.
point.
So all info will be given in the same message, which,
yeah.
Okay, fair.
Then you can ignore the day trades, right? Whichever you, because each member may like something. So we are trying to cater to everybody's needs.
Makes sense. And those who are combined on option and stock premium channel both, there'll be two different subscription, or that is single channel Telegram group which covers both?
No, we have two Telegram channels, but you have a discounted price if you take both of them.
Both of them. Okay, sure. Thank you. Thank you very much.
Last question.
I have one quick question, Kishore Garu. Can I ask quick one?
We'll complete this. Mr. Sukumar, he's waiting since long time. Hey, Sukumar. Yeah, you can go ahead, Rajagar.
Nageshji, is a Moderna and Teledoc, are those two stocks on your list? The long-term multi-bagger kind of?
Not Moderna. I have T-Doc. It's a telehealth.
Oh, okay.
So I picked this after reading a book called Unscaled. So I think it has gone down a lot. But it will take time. That's a so slow mover because of the regulations and everything that has to come up with some of the resistance with the doctors and everything in the medical industry. But it is not going to stop.
How about QDEL?
Maybe Rajagar, it is not a right. Everybody
Okay. Thank you. Thank you.
Thank you, Andy.
And Nagesh, one quick question. Like, what is the book you said? Something about T-Doc?
Unscaled.
Unscaled. Yeah, thank you.
So yeah, thank you, Nagesh, for a great session. So thank you, everyone, because we initially planned it until 7:30. It is nearly 8:30. So Nagesh took a lot of a great time explaining each and every question. Thank you, Nagesh, for taking time.
No problem.
I know there are few members want to know individual stock pickers like NNDM and all those things, but yeah, it will go for another 3-4 hours if we start taking each and every ticker. So yeah, thank you each and everyone. And again, as I mentioned, identify your personality. You have all these options now. Instead of saving money in a bank, there are so many other opportunities. Sometimes, right, there is that little risk, but yeah, without taking risk, nothing will move, right? If we go out of the home, there is a risk, but we don't stay at home in the same way, right? Investments are also same thing. So yeah, have a nice rest of the weekend, and good night, everyone.